Good morning, traders. Steve Ganz here, and I want to pick up on our continuing series here of an options trade from start to finish. So let me kind of split my screen here. So this is a position that we opened back on June 7th. So this is a broken wing all put condor. At that time, our market, this was June 7th, right here, looking at a chart, our market was at around the 4260 range, somewhere in there. So we would have been right about here, right in the center of our tent. Now, this position was put on, excuse me, in a way that our market had been acting bullish. So the expectation was that it might continue to maybe chop sideways, maybe pull back a little, maybe move up a little bit further because it had chopped sideways a number of days there. Well, as we know, the market exploded essentially from there. So 4260 up to almost 4460. That's a 200-point move in the SPX. That's a massive, massive move. So we have totally exploded from inside the center of our tent to all the way up here. Obviously, that puts this position now down money. It's down about $115. If we roll back our what we call our T0 line to today, we can see where we're at there. If we do nothing at all with this position, it will decay a little bit further and end up in a little higher loss. But there's not a lot of decay that's going to happen on this trade from here. We take a look at our various Greeks. It's going to lose $1.92 a day in theta going forward. Okay, so that's kind of where we're at. Actually, right now it's still positive theta, so this is still mounding up a little bit as we go forward. See how that red line just slightly crept up, but that won't last for long here. Fairly soon, the red line right here is going to start to drop, and that's going to drop down to meet the dashed line, and then you'll be down 155. So there is a little bit more potential loss that could occur in this trade if we do nothing or if our market does not pull back. I mean, the other thing we can do here is we can wait for our market to pull back into our tent. So what we need to do, and what I teach my students, is we adjust these things. Now, nobody expected the market to rip the way it has. That's highly unusual to have that big of an up move in a few days. Certainly it does happen, and it did happen. So what do we do with this trade at that point? Well, there's a lot of different things that you can do, okay? So with options, you can do all sorts of creative plays, creative moves. But what I tend to do is we keep our original premise on that basically we're wanting to now just kind of recenter ourselves over where the market is. Well, we do that by taking this call spread, in this case, and we roll it all the way up to here. So we buy these back. We are going to be buying these back at a loss. We need to know that. And then we're going to be reselling that call spread here above the market. Now, you can do that wherever you want along the way here. And of course, you can make it different widths so that it is, wider or not as wide. You have more risk, less risk in the trade. So we can see this is where I chose to do it, to keep 10 points wide on this. Let me refresh that screen there. And to keep that 10 points wide, to keep us kind of centered in the tent. I mean, now I could still lose, and notice that I did open up upside risk here to this, to this upside. I also do have a little bit more risk to the downside, but that downside is a long ways away at this point. But now, if we come and we look specifically at our theta, well, now theta is working for us to the tune of around, $5-6 a day, decaying in our favor now that we are under this tent. Now, you also notice we don't have near the amount of profitability that is in this trade anymore. Here on the original trade, if it decayed inside the tent, we could have reached about $800 in profitability. Again, I do not carry my trades to expiration, but now you're looking at about $500. But again, this trade went against us, so we had to spend money to close this spread. We reopened this spread, but we're not going to get as much money for it as we lost here. And we can see that. Let's come in and see we got 6 positions here. We're only seeing 4 positions here, but it's showing 6 positions. So here are our current open positions, and we're up $210 in this open position, and we are largely up that $210 because this put spread that we sold down here when the market ripped up, that has decayed significantly in our favor. Had we only had on the put spread, we'd be golden. But again, you don't know which direction the market's going to go. So if you only put on the put spread and the market went down, you could potentially suffer a sizable loss. So this type of options trading, where you're doing butterflies, condors, things like that, is largely considered what's called delta neutral trading, where we're not trying to pick a direction in the market. We're more trying to pick a range in the market and then letting theta decay within that range. So that was our goal here. But now let's look at our close position. So we're up $210 in the legs that we currently have open, but we got $300 in losses on this closed trade that we had to close right here, this call spread, and move it up. So the combined of those does give us our roughly $90. Now this price is floating slightly between these two because this old trade is still basing its price off of these old strikes, where the new one now is pricing off of this. So those will float around a little bit differently because right now they're 2 different trades. I'm just pulling them both up here so that you can see them. And let me show you the process of getting from here to here. I'm not going to actually do it because I want to keep this trade kind of in its original form for reference going back to it. Oh, one other thing to notice here, since it just popped up. See how a couple seconds ago this was down money? Well, the market hasn't quite opened yet. We're 15 minutes before the market opens. When the market has not opened yet, and market makers are in there and they're kind of setting up for the day, they can pull bids, put in asks. Your P&L in a position, and this is on any platform, can go really, really wonky prior to the open of the market. And it usually happens in that 15-minute window just prior to the open. And this is not just on SPX, although it probably is more prevalent there, or you'll see those ranges much wider there than you will in other places. So when you have a position on in paper or in one of your accounts in live, after hours quotes, just take them with a huge grain of salt, because the market can be having all sorts of people in there kind of changing their pricing around, pulling bids, reinserting asks, things like that. And it has no bearing on the actual market when it opens. But back to what I was going to do here, we've got 4 positions. If I wanted to come in, I would have to come in and close these 2. So I would select the 2 calls that I wanted to close in this particular case. So we can see that we've got the, let's see, that was our 43.20, 43.30. So I can click on this particular position here and I buy it back to close, and it's going to give me the opportunity to put in a specific price there. So I can actually put in the price that I got from my broker on that, and then I would go to the next one, close it, sell to close, and put in my exact price that I got from my broker. And then I could go establish the 2 new ones here by adding a leg, and I'm going to sell a call at 44.80, and then I'm going to buy, I was up here on, sell a call and then buy a call at 44.90, again, putting in the actual prices that I had gotten from my broker if I happened to have traded it live. And then I would have a new P&L diagram that would look like this. If we scroll this all the way back to today, again, our market is not open right now, so this will not look accurate, because you see right here, it's showing us that we have that roughly $90 profit, which we do not have. This curve will be down in here somewhere at a slightly negative number as the market opens. It will reflect the down roughly $110 or whatever this position had been. And then what we're looking to have happen, of course, is theta decay as time rolls on, and we're in this location here. This should start to have some profitability creep back into it. If, as many people think, our markets are a little frothy and a little oversold where they're overbought where they're currently at, and they sell back a little bit, maybe settle back into this 43.50 range, 43.40 range, somewhere in there. I mean, if that were to, where in the heck did I go here? If that were to happen, I'm not sure where my screen went now. Let's see. Oh, here we are. If that were to happen, 43.40, somewhere in that general range, that would certainly be very good for this position a little more quickly. So again, that's kind of the summary of this position and where it's at right now. I adjusted it the way I adjusted it, willing to be able to take, or able and willing to take a little more upside risk here based on the assumption that the market is likely to stall where it is, or maybe even decay or pull back a little bit into here and let my theta decay take place. So those are the things that I'm looking for with this new position. So I've got this saved. I am going to provide both of these links so that you can update it yourself in a paper trade. And let me just do that right now. Let's see, I've got that both saved. I've actually already saved the links. So I'll just drop them into the video description below, and you can follow along. So, of course, if any questions come up, let me know. But keep in mind, there are hundreds and hundreds of ways that you can adjust positions. So one of the challenges with me showing this is I'm selecting one of many, many ways that people might choose to deal with these. And I won't be able to answer all the questions of, well, why not this? Well, why not this? Well, why not this? Because there's literally hundreds of things you can do. But the awesome thing about optionstrat is that I can come in and quickly move things around and model them to see all of the what ifs that I might want to consider in my position. So hopefully that helps. Everybody have a great long holiday weekend, and we'll see you back next week. Take care.